Hey guys, welcome back to the Bitcoin Fortress podcast, building one block at a time. Today is May 17th, 2026. We are at block height 949842. Moscow time is 1,280 sats per dollar, and fees are sitting at 1, 1, and 2 sats per VByte. This week feels different, not because Bitcoin pumped, not because ETFs had inflows or outflows, but because the deeper structural problems underneath the global financial system are becoming harder to hide. Japan's bond market is shaking. Governments are trying to define acceptable crypto. Developers are still under legal pressure. Miners are pivoting into AI infrastructure. And meanwhile, Bitcoin, well, it just keeps quietly producing blocks every 10 minutes. This episode is really about one question. What happens when the legacy system begins losing credibility faster than Bitcoin loses volatility? And with that, let's get into it. First up, the real story is the bond market. Japan's bond market is starting to crack. This may actually be the most important macro story in the world right now. Japan's 30-year government bond yield just crossed 4% for the first time ever. The 10-year hit levels not seen since 1997. Now, normally this would sound incredibly boring, but Japan matters because Japan has been the global template for debt monetization and zero-rate policy for decades. For years, global markets were built around one assumption. Japan would keep rates artificially low forever. Cheap yen funded carry trades across the world, US Treasuries, stocks, tech, real estate, Bitcoin, everything. Now that system is wobbling. And this is where Bitcoin becomes interesting, because Bitcoin is not just competing with fiat currencies anymore, it's competing with the credibility of sovereign debt itself. That's a much bigger game. A lot of people still think Bitcoin is competing against Visa or PayPal. It's not. Bitcoin is competing against central banks, sovereign debt markets, monetary credibility, political trust, and eventually, maybe even reserve currencies themselves. And that's why this matters. Moving along to the next segment, we'll talk about the Clarity Act and the fight over control. The Senate Banking Committee advanced the Clarity Act, and depending on your perspective, this is either progress, a Trojan horse, or both. The mainstream framing is, finally, crypto gets regulatory clarity. But Bitcoiners should ask a different question. Clarity for whom? Because every major bill eventually reveals what governments actually care about. Surveillance, control points, intermediaries, reporting, and permissioning. And one of the most important unresolved issues is still developer freedom. Samurai Wallet still hangs over the entire industry. This week there was renewed discussion about whether proposed protections still leave room to prosecute open source developers under the same theories used against Samurai Wallet. This matters enormously, because if developers can be criminally liable for writing privacy software, then financial freedom becomes permissioned innovation. And Bitcoin fundamentally cannot survive as freedom money if every privacy tool becomes legally radioactive. The irony is incredible. Governments say they support innovation, but only if innovation remains fully surveilled. Next up, self-custody is becoming a civil rights issue. One of the themes coming out of Bitcoin 2026 was something I think is going to become much bigger over the next decade. Self-custody as a civil liberty. Multiple speakers frame self-custody not as a technical feature, but as a fundamental human right. And honestly, I think that framing is exactly correct. Because if money becomes fully digital, and all digital money requires third-party permission, then whoever controls access controls your life. Bitcoin changes that, not theoretically, literally. That's why nodes matter, cold storage matters, privacy matters, and why running your own infrastructure matters. You're not just protecting wealth, you're preserving agency. A lot of people still think self-custody is about paranoia. I think increasingly it's just about adulthood. Next up, miners are becoming energy companies. Marathon sold over 20,000 Bitcoin. One of the more fascinating stories this week, as they sold the Bitcoin and are aggressively pivoting towards AI infrastructure. This initially sounds bearish, but I actually think it reinforces Bitcoin's strength because Bitcoin doesn't depend on any miner. Miners adapt or die. The network survives. And what's fascinating is that miners accidentally became some of the world's best energy arbitrage operators. Now, AI wants that same power infrastructure. So, we're seeing a convergence: AI, energy, data centers, and Bitcoin mining. Bitcoin mining may have been the first large-scale industry that monetized stranded energy globally in real time. That's a much bigger historical contribution than most people realize. Next up, privacy is coming back. Now, this next story is controversial but important. The Wall Street Journal ran a piece this week about renewed interest in privacy-focused systems like Zcash among early Bitcoiners. Now, I personally remain Bitcoin only, but I do think the article reveals something important. People are waking up to how little privacy exists in the modern financial system, and that concern is growing. An important distinction: the answer is not necessarily go buy privacy coins. The real answer is improve Bitcoin privacy, normalize CoinJoin and eCash systems, improve Lightning, improve wallet design, reduce address reuse, and make privacy the default expectation again. Because privacy is not criminal, privacy is normal human behavior. Next up, Bitcoin Core disclosed a major CVE. Bitcoin Core disclosed an old but serious vulnerability this week. And honestly, I think this is bullish because the process worked exactly as intended. Responsible disclosure, patching, peer review, coordinated release. Bitcoin isn't trust us, bro. Bitcoin is open source, adversarial, constantly reviewed, and battle tested in public. That's very different from legacy finance, where problems are hidden until they explode. All right, moving right along to the next segment, podcast universe themes. There were a few themes that dominated Bitcoin podcast universe this week. First, sovereign debt stress is accelerating. TFTC especially hammered this theme hard all week. And it wasn't just Japan. All of the bond markets have been going crazy with long yields climbing, and oil continuing to stay persistently high. Self-custody is evolving from niche skill to necessity. A lot of discussion around wallet UX, inheritance, insurance, recovery systems, multi-sig, and node infrastructure. Privacy is re-emerging as a core Bitcoin topic. It's not fringe anymore. It's a mainstream concern now. And finally, Bitcoiners are increasingly viewing Bitcoin as infrastructure, not just an investment. And that is a major evolution. Moving right along to the featured Bitcoin Substack post this week, Bitcoin versus the legacy system. Honestly, this entire week reinforced the thesis of that essay. The legacy system increasingly looks over-leveraged, surveilled, politicized, inflationary, and fragile. Bitcoin increasingly looks neutral, transparent, decentralized, and resilient. That contrast is becoming harder for people to ignore. Before we wrap up, did want to mention this the 4 Bitcoin Fortress books that are available to check out. Links in the show notes to this, as well as all the news articles that we consumed this week. Bitcoin Fortress, a simple guide to Bitcoin for beginners, Bitcoin retirement and estate planning, the Bitcoin lifestyle, and the most recently published book, The Architecture of Money. The new book especially ties directly into many of the themes we discussed today: debt, incentives, monetary design, time preference, and the architecture underlying civilization itself. Well, that's it for episode 216 of the Bitcoin Fortress podcast. The signal this week wasn't really Bitcoin price action, it was up and down. The signal was stress inside the legacy system itself: bond markets, surveillance, developer pressure, energy competition, monetary credibility. Bitcoin doesn't need perfection to win. It just needs the existing system to continue revealing what it actually is. Stay humble, stack sats, run your node, protect your privacy. Bitcoin Fortress, building one block at a time. And I will talk to y'all next week. Bye-bye.